Hey Rebels, welcome back to the channel. What if I told you that history is repeating? What if I told you that this time is not different? Fear is gripping the markets right now, extreme fear, fear that we haven't seen since the February lows of this year. I'm seeing a lot of anger in the comments. People are capitulating. People are very angry about crypto right now. Typically, these are bottom signals. So why don't we dive into the charts and find this seasonal pattern that I found in the charts? If that sounds good, like and subscribe, and we're just going to dive right in. Also wanted to take a quick moment and thank you for all my subscribers. I've got a lot of new subscribers recently, a lot of more activity in the comments. I really appreciate that. That helps me out a lot. So please like and subscribe. Please leave some constructive criticism down below, and we'll just dive right in. So I have right here in front of me the total free minus USDT. I have a very similar chart that I've shown many times, that being the total two versus Bitcoin. We've been tracking that for quite some time. We've broken trend here, and we're basically following this for a five-wave pattern to the upside. And right here, I basically have just omitted the stable coins to kind of give us a cleaner chart. It's on a 2 week chart. But what we can see is before each peak of the bull run, we have this October seasonal period, which we've also been talking about for a long time on the channel in Bitcoin itself. But we have this seasonal period in October, November area before we get an aggressive push in the altcoins versus Bitcoin, which is really what we care about. Because if we're looking for significant gains in the altcoins, we want to be outperforming Bitcoin. We're waiting for that capital rotation. Typically happens at the end of the cycle. Again, in 2020, seasonal period, bottoming against Bitcoin, aggressive push to the upside. And in 2024, we had a false start. Everybody was kind of waiting for this repeating cycle to happen. We all got faked out, and we basically ended up going down here for lower prices. But here we are, October of 2025, seeming like we're trying to find a bottom, trying to find that same base that we've found in the others, or the total two versus Bitcoin. Now, you can see this a little bit more clearly as well in the others versus Bitcoin. There's many ways to draw this out, but the story is basically the same, where we have basically levels that are hit every single cycle before the altcoins rally. Typically in any market, when everybody is when everybody is over it and beaten and exhausted and angry and tired and crypto's a scam and this is terrible and they're just exhausted because the last 3 years they just haven't been able to make it happen and they've been promised this altcoin season. Everybody's left. All the selling is done. So what happens after that? Well, what happens after that is typically it bottoms against Bitcoin and you get this aggressive push to the upside. Now, there are no guarantees. There are no guarantees in any market. But what we have in front of us is the data. This is just one data point, which you can't rely on one data point. You can't, one data point would be that Bitcoin has topped because Bitcoin typically tops Q4 of, well, this would be this year. Q4 of this year was basically when everybody was expecting Bitcoin to top. That's why everybody's calling for Bitcoin topping right now. I think that's dangerous. I think that it's dangerous to try to call every top. It's definitely good to be aware of these time frames, but we need more data and we need to basically compile more layers on top of each other before to get a bigger picture. So I wanted to start with that. I just think that that paints a pretty picture for any of us who are hoping for this altcoin season. Everybody's basically very angry right now, convinced that it's all over, convinced that we're going on for lower prices. And I think that that actually is a better setup than we've had all year because effectively, any investor, any savvy investor has understood that the risk to reward has not been favorable for most of this time. And now that we can see, from these levels, the risk to the downside is minimal compared to the reward to the upside. So the risk reward has not been great this whole time. You could argue that the risk reward was decent here, which is why we had that push and it got rejected. But either way, risk reward at these levels are much more favorable than they have been in the last several years, right? Had a wick down to this buy zone that we've been talking about for quite some time on the channel. A break of this trend line is going to give us a lot more confidence. We're not out of the woods yet. This hasn't been confirmed, but it's a lot easier to be earlier than to try to be, outsmart the market or anything like that. So another signal that I would like to talk about briefly is the gold chart. So there's a lot of hype around gold recently, and I'm seeing a lot of comments about gold. Anybody who is suggesting that there's a top in gold, I'm seeing a lot of angry comments about, no, you're an idiot, you're wrong. Gold's just going to get repriced. There's going to be minor corrections. It's going to keep going on. Nation states are buying this. Retail's not involved. It has nothing to do with it. And nation states are just going to buy this up. They don't want the price to fall on gold. And I just kind of want to sober up the thought process on that. And I'm going to use gold as an example. I'm going to put this to a monthly chart. And I want to show you one signal that I've found that could suggest that we might actually very well be near a top. So what I have here are price projections. I use trend-based fib projections to give me an idea of what levels markets can do. So we had a bull market here, and so what I've done is I've projected this move off of the low here. Okay, so we have that move off of this low here, and we can see that this gives us different levels of repeating patterns. So if it did 100% of that move, that's here. 150% of that move gets us here. 200% of that move gets us here. And so what we can actually see is that the market has basically given us a 200% move off of these lows. So if you repeated this move off of this low, 200% gave us the exact top of the last cycle. So all I've done is do the same thing where I project this move right here off of the lows. A 200% move gets us right here. So the market has done this before. Gold has done this before where it will do a 200% move of the previous run off of its lows. Okay, that gets us right here. The other thing I've talked about on the channel is how overextended this move is, because I won't put the swing indicator on right now, but we do have 11 months straight up to the upside, which has only happened once before, and that was in the 1970s. Okay, so gold has pretty much never done that before. And so I'm not calling the top on gold, but I'm just saying there are a lot of top signals in gold. And so what does that do for us? I've talked about this a little bit on the channel, but I wanted to just kind of illustrate this a little bit more clearly on what happens, at least in the altcoin space. I've shown it against Bitcoin, but in the altcoin space, what does that do? Okay, so what I have here is on the top, I have gold, and on the bottom, I have the total three in the crypto market. So we can see that when gold is rallying, typically a risk off environment. I'm just going to make this very basic terms. These aren't always 100%, but we're just going to kind of get the basics here. Okay, so when gold is trending and doing well, typically not great for risk assets, crypto being the riskiest asset. Okay, and it's not really until gold has a little bit of a correction or sideways period that people are willing to take risk and put risk on the table and get themselves into the altcoin space. So we see money coming back into the altcoins. Again, gold goes on a run, money comes out of crypto, kind of a risk off, more risk off environment. Again, gold going sideways, a little bit more buoyant environment in the crypto space. People are more willing to take risks during those times. And then again, gold has been on an absolute tear for the last, many months, pretty much straight up for almost 11 months. And crypto really hasn't gone anywhere. You know, um, Looking like possible short-term distribution in this zone, sideways chop, basically just in general a risk-off environment. So if we can see that gold is having the same repeating pattern where it's done 200% of its move off of the lows, a top might be in its future. And typically when we see money coming out of gold in general, it's risk on at the same time as we're seeing these similar time frames happen where altcoins are bottoming against Bitcoin and everybody thinks that it's all over. To me, I think the risk reward at the very least is much more favorable than it has been. So even if we're wrong, we're taking a lot less risk in that assumption. Am I saying that we're going to absolutely have an altcoin season? No, but I'm saying that objectively, based on the data, the risk reward is better here than it has been. And that's basically what I want to get at. So I am going to follow this video up with the weekly analysis because that's typically what I do. I've been talking about this for a long time on the channel that I think that we're bottoming against Bitcoin with the altcoins. I don't think that this time is actually different. And so let's just dive into Bitcoin and see what we can find. I talked many times on the channel about this 3 week, this 3 red week signal, and that typically after this 3 red weeks, we see some kind of correction or prices breach the lows of that signal. That has technically happened. We almost got an invalidation when we breached the tops here, but we're still getting rejected, and we actually did end up seeing those lower prices. So we've been waiting for this for a long time. If you've been following the channel, we've been following Bitcoin's weakness for actually some time. And one other way to illustrate this is if I draw a speed line from the previous move, I like to do this to gauge the next move. You can see that objectively, this move has been weaker since August of this year. So since August of this year, I've been talking about how this move is objectively weaker than this move. Typically, bull markets get stronger as they go until they don't, right? And so we're already starting to see that weakness. We have this all-time resistance line from the 2017 peak to the 2021 peak. We've been tracking for literally months, probably almost a couple years at this point, just really not able to convincingly break and hold above. So, could this be the top for Bitcoin? It could absolutely be the top for Bitcoin. I'm not going to say that it's not, but confirmation of that comes at much lower prices because we are still technically in a strong position. And how I objectively determine that is by using what Gann has taught us as 50% levels. So all I really have here is the fib retracement tool, the settings 0, 0.5, and 1. And what that does is it tells me if we're in strong territory or weak territory. Anything in the strong half of this tool is technically in a strong position. Anything in the lower half is technically in a weak position. And that has helped us several times on the channel when trying to determine whether we've seen the end. Okay, so during this time, everybody was very excited right here. And by the time we were ending this correction, people were not convinced. They thought it was all over. We knew ahead of time on the channel that we were doing okay because we were in strong territory and we found support, above this 50% level. So we knew that we were in strong territory. We knew we were in good shape. The other thing was we used this 50% tool again during these levels to assess this move. And typically you expect to see buying pressure when this 50% level is approached from the upside. That's exactly what we saw. We saw wicks below, but we never saw any multiple closes or lower highs below this level. Again, telling us that we were in strong territory. It was more likely that we were going up from here. This is an incredibly strong tool. Markets across the board are heavily drawn to them. And so I'll just do the same thing here where I have drawn this move. We are still technically strong. And now you can use this for shorter term moves to give yourself even more dialed into the market. And as we draw in a little closer, we are seeing that weakness, which is no surprise because we actually had that lead on the potential weakness with our speed line and with this 3 red weeks down. We've been talking on that channel pretty much at nauseum about the weakness that we're seeing in Bitcoin. Now, whether we're at the end or not, that's to be seen, and we can't make those assumptions yet. Unfortunately, that comes at the cost of lower prices. We're probably going to have to breach these levels down here below 100,000, starting to see multiple closes and lower highs, weekly closes, maybe even monthly closes before those levels to find out that, Bitcoin is actually cooked. But that actually doesn't really matter too much for us because none of us are interested in Bitcoin. Bitcoin is the big daddy, but really right now, probably what matters most is Ethereum. How is Ethereum doing? Is Ethereum in a strong position? And I haven't really done much analysis on the weekly time frame for Ethereum, but just quickly while I'm on the charts, why don't we just grab this and see how we're doing on ETH? Still in very strong territory, especially for the entire bull market. We're in very strong territory. As we march this up, we can see that we're still in strong territory on these moves here. So let's take the most previous move from this low, still in strong territory. And yes, of course, weakness we are seeing in Ethereum on the shorter term. So we just have to keep an eye on these levels to see how we're doing. But something that I have mentioned on the channel many times is that Bitcoin dominance does not break down in a very significant way until price breaches previous highs. So if I were to get the Bitcoin dominance chart on here, which why don't I just do that? I'm going to add Bitcoin dominance, BTC.D. I'll just add that to the chart. Then I go over here and I click this and I say move to new pane below. And that gives me that chart here, and I can hide this one now that I've talked about that. And this gives you a better visual of what happens to Bitcoin dominance after Ethereum breaches convincingly its old highs. You can see that pretty much Bitcoin dominance falls off a cliff at that point. Why don't we go to the previous cycle just to complete the idea here? And I don't have this on logarithmic. A lot of times I keep this just on a regular scale just because. But yeah, so here again, breaching those previous highs, Bitcoin dominance falls down very aggressively. So talked about that a couple times on the channel. We have not convincingly breached all-time highs in Ethereum yet, but why don't we just draw a nice trend here? We can see that we basically just touched those all-time highs, and then Bitcoin as Bitcoin dominance is starting to fall in a more convincing way. Okay. So that being said, why don't we just dive into the last couple things of the analysis that we always do? Bitcoin dominance. Bitcoin dominance again in a weak position, broken this channel, and is still just looking very weak at this point. USDT dominance probably the most concerning. We did have this large rally in here, but we still are in weak territory for the USDT dominance. What we would like to see is more closes below this level, and if we can actually come back down and breach this all-time support, then we're probably going to see a much more buoyant environment for crypto. But we have to watch that like a hawk because this is going to be one of those leading indicators that a lot of people are fading right now. People don't want to, when times are good, they want to ignore the analysis. And when times are bad, people want to ignore the analysis, which is why we have to come back to the charts every single. I do weekly analysis every single week at the very least, and see what the data is showing us. Right now, luckily for us, USDT dominance in a weaker position, so we're not seeing money rush out of crypto and stay out of crypto. Okay, one thing to note about this is that we are getting more and more stable coins in the market, so that could affect the dominance. But so far, this thing has just played to a T, and every single time we get a low here, it basically calls a top in crypto or in Bitcoin. So we basically just don't want to see this thing rallying, especially above this old trend line. So it's kind of going to be make or break it for the USDT dominance here in the coming couple months. Okay, so we'll just have to watch that like a hawk. What else do we have here? Something else we've been talking about on the channel for a long time is this cycle composite. We've basically been following this to a T. We have a little bit of divergence right now, but you can see that later in the year is going to be a little bit easier times. The last thing that I haven't mentioned for quite some time on Bitcoin at the very least is the liquidity, but we did have a lead on the liquidity giving us some problems during this time for quite some time. Let me just see if I can pop that back on. Apparently, I took that off. Yep. Okay. So we had the money shift here. Let me check and see if that's on the right days. We're on the weeks, and where are we at? 12-ish, I believe, is what we had it on. Okay. Yeah. So we could basically already tell. Let me see. We knew that. Well, of course, now I'm botching it. I don't think I have this actually slid. I don't think I actually have this slid to the right spot. I forget where I used to have it. But either way, this period right now actually aligned very well with this period right here. This period was like more lined up in the September area. I have this shifted incorrectly, but this dip in this shift right here, this money shift, was lined up pretty well in this kind of September, October time. So there were multiple indicators telling us that that we were going to see a slowdown during this period, and that after that we have continued increasing liquidity. That's the point that I want to get. So this period right here on the money shift kind of correlated to this right here, seeing increased liquidity for the rest of the year at the same time that we're seeing the composite showing a strong end of the year. While everybody's very bearish, everybody's very bearish right now. People are mad. And everybody's convinced that this is the top, and really every other cycle top we just haven't seen that. Next week I'll get my money shift on the right settings, just because I haven't followed it in so long, but either way it was giving us a lead on this time frame here. We just haven't seen the sentiment and many other indicators flash for this cycle. Now, it could also be argued that because this cycle is more institutional, you may not see as much, exuberance or volatility or greed. I mean, we've definitely seen less volatility, but really what I'm getting at, you don't see highs in the market end with the extreme fear. If you go back into any Bitcoin cycle, they basically end in some kind of greed or extreme greed. So that's basically going to wrap it up for this analysis. We're going to have to just keep coming back to the charts. The last thing I did want to note that I did notice that I thought was interesting. Early leads, kind of subtle signs. You can see that last week Bitcoin had a pretty rough week, and the dominance of the or the excuse me, the total free versus Bitcoin actually held up relatively strong. You can see that in the others as well. The others actually held up quite strong. We have this itty bitty candle right here. We did not give as much. Bitcoin has bled more. So Bitcoin topping or slowing down is actually kind of counterintuitively good news for people waiting for the altcoin space because basically that capital is going to rotate from the safer assets to the riskier assets. If Bitcoin is starting to lose some of its market cap, it's going to give it to the riskier assets before we head into that bear market. Everybody's ready for this bear market. They think it's now, and they've been trying to call it every single top the entire way up. But really, this time is no different. Altcoins seem to have bottomed against Bitcoin. It just seems like a better risk reward here than it has been for a long time. So I think that we're in for a treat or surprises for sure. The volatility is going to continue to increase and throw people off their game. I think that the volatility that we saw last week is just indicative of the market is showing its cracks. It's showing its fragility as things get weaker and more fragile. At the later you go in the cycles, it's just starting to show its face. Like those weaknesses and those uh, uh, yeah, basically just those weaknesses are starting to show their face in the later in the cycle. Things are getting more volatile. Emotions are getting more volatile. But what we need to do is we just need to zoom out, take a little step back, and say, okay, well, even if Bitcoin has topped, and this is the top for Bitcoin, that doesn't mean that it's the end for the altcoins, which most people watching this, most people that are in crypto are holding on to altcoins. They're the most volatile assets that you can possibly own, which means they're the most emotionally volatile assets to own. So keep that in mind when you're getting into these markets. It will not be easy. It will be hard. So that's why they call it a bull market because it tries to buck you off. And really what it takes is strong conviction in your own research. You have to do your own research. None of this is financial advice. This is me sharing the patterns that I'm witnessing in the charts, and analysis is different than trading. So you have to take this analysis and do your own with it and come up with your own trading styles, your own trading ideas with this information. So hopefully that was helpful. We'll see you in the next week's analysis, and I will try to get another video out this week talking about the other things that we can use, the different tools at our disposal to try to get indications that a low or that a bottom is in. So anyway, if that sounds good, again, please like and subscribe. Please leave some comments down below, some constructive criticism. I'd love to hear your thoughts, and we'll see you next time. Thanks, guys.